Welcome to Simple Investing Secrets, your go-to source for valuable investment information. In today's highly anticipated video, we are thrilled to delve into the fascinating world of AI stocks that have caught the attention of none other than Cathie Wood, the renowned investor from Ark Invest. Before we embark on this exciting journey, we kindly ask you to show your support by liking this video and subscribing to our channel. Your engagement truly makes a significant impact on the growth of our community. Without further ado, let's dive right in. Cathie Wood, the visionary behind Ark Invest, has gained a stellar reputation for her investments in disruptive innovation. Among the various cutting-edge technologies that she recognizes as transformative, artificial intelligence, AI, stands out as a true game-changer in today's world. When discussing AI stocks, it would be remiss not to acknowledge the incredible strides made by the NVIDIA Corporation, ticker NVDA. This chip-making giant has experienced an astounding 165% surge in its share value thus far in the current year, even surpassing the remarkable milestone of a $1 trillion valuation. Although Ark Invest's flagship fund, Ark Innovation ETF, ARKK, decided to exit its position in NVIDIA back in January, it's important to note that some of its other exchange-traded funds, ETFs, still retain positions in this remarkable chipmaker. In a recent interview with Bloomberg Television, Wood expressed her confidence in NVIDIA's long-term prospects, stating that the company will do well over time. However, she also highlighted a new group of AI stocks that she believes will thrive, building upon the foundation laid by NVIDIA. Wood further elaborated, stating, "In our view, for every dollar of hardware that NVIDIA sells, software providers, specifically software as a service providers, will generate $8 in revenue." She emphasized the significance of exploring opportunities within the software sector, particularly those companies that are currently in a similar position to where NVIDIA once stood during its early stages of growth. Cathie Wood's insights offer invaluable guidance for investors seeking early entry into AI stocks with substantial growth potential. As a testament to her expertise, she proceeded to reveal 3 software companies that she firmly believes will flourish due to their association with AI. Additionally, she unveiled what she considers the biggest artificial intelligence play, further piquing the curiosity of investors eager to uncover the next groundbreaking investment opportunity. Join us as we explore these intriguing AI stocks, carefully selected by Cathie Wood, and gain a deeper understanding of their potential to revolutionize the investment landscape. Here's a look at 5 companies that Wood calls the biggest artificial intelligence play. Number 5. CrowdStrike Holdings, ticker CRWD. The Ark Next Generation Internet ETF and the Ark FinTech Innovation ETF bought shares of CrowdStrike Holdings. While this is first and foremost a cybersecurity company, it's long employed AI to detect threats to its clients. Few cybersecurity providers can feed their AI models the brontosaurus-sized portions CrowdStrike has access to. Its platform analyzes trillions of signals each week. Wood's CrowdStrike purchases on June 1 were a little surprising because the stock sank more than 11% in after-hours trading on May 31. Investors were responding to forward-looking guidance in its latest earnings report that suggests growth is decelerating. Despite the recent drop, it's still up about 46% this year. During its fiscal first quarter that ended April 30, CrowdStrike reported revenue that rose 42% year-over-year to an annualized $2.77 billion. CrowdStrike raised its revenue outlook slightly for the full fiscal year of 2024 from the range it provided in March. Management now expects total revenue to land between $3.0005 billion and $3.0367 billion. The midpoint of CrowdStrike's new guided range for fiscal 2024 revenue represents a 35% year-over-year gain. This is less than investors are used to, but probably still fast enough to justify the stock's sky-high valuation at the moment. The shares are trading at around 66 times the midpoint of management's earnings projection for fiscal 2024. Following Wood's lead probably isn't a bad idea, given CrowdStrike's projected growth rate and its leadership position in the exploding market for cybersecurity solutions. That said, investors need to realize that further signs of a slowdown in its next several quarterly reports could cause this richly valued stock to fall hard. Number 4. Uipath Incorporated, ticker PATH. Uipath is a robotic process automation software company that provides automation solutions for businesses. Its AI-powered Uipath business automation platform is capable of understanding, automating, and operating end-to-end processes. 6 funds managed by Ark Invest purchased stock in the Robotic Process Automation, or RPA, software company on May 25 and 26. Since its inception in 2005, the Uipath platform has employed AI to become a leader in the RPA industry, and it isn't about to stop now. The latest release includes an open AI connector that allows developers to access the GPT-3 model that made ChatGPT famous. Wood isn't the only investor enthusiastic about AI and buying heaps of Uipath shares lately. The stock is up 47% this year. Most of Uipath's customers use its platform to automate away repetitive tasks so they can send employees packing. Some even use it to free up time for valuable employees to do more thoughtful work. Either way, demand has remained strong during a relatively soft period for software-based services. Uipath reported a 122% dollar-based net retention rate during its fiscal first quarter that ended April 30th. In the first quarter of 2023, the company's revenue grew 18% year-over-year to $289.6 million. Notably, its dollar-based net retention rate was 122%. The stock has surged 47% year-to-date, but it hasn't always been a hot commodity. In 2022, Uipath shares plunged 70%. Wood's Ark Innovation ETF owns 28,865,375 shares of Uipath. With the position valued at $517.28 million, Uipath is the fourth largest holding at Ark. Uipath stock has been trading at around 63 times management's expectation for adjusted earnings this year. This is a high multiple, but the company still has a pretty good chance to overcome its valuation and provide market-beating gains from present levels. From now through 2030, the RPA market is expected to grow by 39.9% annually, according to Grandview Research. Adding some shares of this stock to a diversified portfolio looks like a smart move to make right now. Number 3. Twilio Incorporated, ticker, TWLO. Twilio's cloud communications platform allows businesses to develop and integrate various communication channels into their applications. Its application programming interfaces enable developers to incorporate voice, messaging, and video seamlessly, helping companies enhance customer engagement. In the first quarter, Twilio surpassed 300,000 active customer accounts. Meanwhile, revenue rose 15% year-over-year to $1.01 billion. In its latest earnings conference call, Twilio co-founder and CEO Jeff Lawson said he believes that artificial intelligence will be a material accelerant over time for Twilio's business. Ark Innovation ETF holds 4,680,705 shares of Twilio, a stake with a market value of $303.54 million. Number 2. Teladoc Health Incorporated, ticker, TDOC. Wood's flagship fund also owns $301.07 million worth of telemedicine company Teladoc Health. The company's platform connects patients with healthcare professionals through video, phone, and messaging. At the peak of the COVID-19 pandemic, when in-person non-emergency medical care was temporarily halted, the demand for telehealth services skyrocketed. In 2020, Teladoc attracted a lot of investor attention as its revenue shot up 98%. While the pandemic is largely in the rearview mirror, the company continues to expand its business. Teladoc's first quarter revenue showed an 11% increase year-over-year. The stock, however, wasn't able to maintain its upward momentum. Trading at $24.30 per share, Teladoc is down more than 90% from its all-time high reached in February 2021. Number 1. Tesla Incorporated, ticker, TSLA. Tesla is Wood's biggest AI-related investment, despite not being a stock that is typically associated with AI. Wood said that they talk about Tesla all the time. It is actually the biggest artificial intelligence play. The reason has to do with the electric car company's autonomous driving technology. Tesla is Ark's largest holding with an 11.81% weighting. Wood expects autonomous taxi platforms to deliver $8 trillion to $10 trillion in revenue globally in 2030, from almost zero right now. And because of Tesla's capabilities on that front, the booming autonomous taxi market could take its share price to a whole new level. Wood says that she believes that in 5 years, in 2027, it will be a $2,000 stock if our research is correct. Considering that Tesla shares trade at around $235 right now, Wood's price target implies a potential upside of over 750%. Investing in disruptive innovation can be very lucrative, but sometimes it can feel like a roller coaster. For instance, while Tesla shares have more than doubled year to date, they are still down over 40% from their peak in November 2021. If you don't like that kind of uncertainty, you might want to look into slow-changing industries that provide considerable cash returns to investors, such as those catering to basic human needs like food and shelter. We'd like to thank Moomoo for sponsoring this video. And as a limited time special, Moomoo is offering up to 16 free stocks. When you open a brokerage account through our special link, Moomoo will give you up to 16 free stocks. So take advantage of this special free stock offer by clicking the link in the description below to get your free stocks today. As always, it is essential to do your due diligence before committing your hard-earned cash to buying stocks or investing in the market. Remember to like this video and subscribe to our channel for weekly updates on the best stocks to buy and cutting-edge investment strategies for building wealth. Thanks for watching, and best of luck with your investments.